Attention, everybody. The views and opinions expressed on the show are not necessarily those of Acts Ministry, Acts Media Group, and/or their affiliate and subordinate ministries and/or nonprofits. So now, here he is, the man with the plan to put gold in your hand, Tony Hammock.
Thank you, Matt. What a day, huh? It's the 6th day of 2021, and things are already really interesting this year. So we've got a packed show full of information and ideas, and hopefully you all will benefit from something that gets discussed or shared and so forth. It's sunny out there right now, but I understand the forecast later on might give us some rain, so if you got some errands to run, you might get out and get it done early as compared to later on today and stuff. And hopefully everybody had a great, safe New Year's Eve and New Year's Day. We're looking at the gold prices right now, and the gold spot price is $19.31.50. The silver spot price is $27.26, and I'm just starting there because they're on my screen and stuff. I think what I'll do is I'll go back to the regular format. You know, the last couple of weeks we've had Lorna Hammock here, and we kind of, did things a little differently, which is fine. I like change is good and stuff, but I think to kind of get back to our old format, and for those of you that this might be the first time you're tuning in and taking a look at the new gold standard, our mission, our reason for being on the Acts Media Group is to discuss and bring up and talk about alternative assets. You know, the mainstream always promotes, stocks and bonds and mutual funds and the stock market and the S&P 500 and, all this kind of stuff. And Jim Whining and I, a couple years back, were talking about, being contrarian and, not following the herd, so to speak. And so that was kind of the start of this program, which is looking at alternatives and not getting caught up in that herd mentality and stuff. So with that in mind, I always kind of like to start with the devotional of the day, or basically the part of the program where we're doing a stewardship course. And that's another big part of the program is I'd like to talk about stewardship, since we are on the Acts Media Group broadcast. I think that's a very important topic. It might be the most important topic when it's all said and done. And today's devotional is the place of money in your life. That's an interesting topic. What's the place of money in your life? Do you have a balanced view, exercising godly wisdom and care with your material goods and gains? Or are you haphazard and careless with what the Lord's entrusted to you? There are 4 positions that people hold towards money. 1, idolatry. For some people, money becomes central to their lives. They devote most of their time, energy, and attention to its gain and use. They regard money as the key to having power and prestige. Since an idol is anything you place above God in your heart and mind, anything you trust in more than Him, when you leave God out of your financial life, you're in grave danger of making money your idol. I guess that's 1 Corinthians 6:9-10. 2, envy. Another position people often have towards money is the sin of envy. They compare what they have with what others have and believe they come up lacking or have been cheated in some way. But God's word is very clear on what envy can do to a body. That's Proverbs 14:30. And the same can be applied to envying the wealth and material possessions of others. Number 3 is greed. We know about greed. Both idolatry and envy can easily result in greed, an insatiable desire for more. It's a void in a person's life that only God can fill, and no amount of money or possessions will satisfy the longing that can only be found in Him. 4, neutrality. The final position people hold is neutral. This is the wisest position. A $20 bill can be used to buy a bottle of booze, which can help lead to a ruined life. Or it can be used to buy a Bible for a person who doesn't know the Lord, which can help lead to eternal life. The $20 bill by itself has no morality associated with it. It's the attitude toward our money and what we do with it that counts. as you take an honest look and evaluate your position on money and material gains, remember God is far more concerned about your attitudes and desires towards money than he is with your starting or ending balance. Do not be deceived. God is not mocked. For whatever a man sows, that he will also reap. For he who sows to his flesh will of the flesh reap corruption, but he who sows to the Spirit will of the Spirit reap everlasting life. And that concludes the lesson. I think that's lesson 4 in this particular course. And it touched on a lot of good stuff. I mean, that's why I shared it. It just, is something where I'm sure in our audience there's people in all those stages. I know I can identify with all 4 of those at some point in my life. And, I think we've talked about it before at length about how, God will take and let you show what you're going to do with little opportunities, like tithing. Are you going to tithe to your church? And then maybe if you're showing responsibility and discipline and all those other adjectives and stuff, he will entrust you with bigger opportunities and stuff. And I think there's some truth to that. It's not like everybody gets to be, the owner of Amazon or something. I mean, there's just a few of us that in a lifetime get to have that much wealth. The Koch brothers or the Waltons or Bill Gates or, we can go on and on and on with the, top list of billionaires, not only in the country but the world. And, it's not always probably as nice and glamorous as it appears to be, which I'm sure Jack Ma could probably identify with at the moment. With all that said, I just think that it's probably wise to have a church that you identify with and tithe when you can, and then let all the rest take care of itself. Anyway, enough about my opinions. We've got a whole list of things that I kind of wanted to cover this morning and stuff. And, obviously one that's very topical since it is January 6th is yesterday was the runoff election in Georgia. And when I got up this morning and looked at the news, it looked like the one Democrat had won, and it looked like the second one was going to win. It was very, very, very close. And I don't know if that's been settled since I jumped in the car and drove over here and stuff. So I'm sure that whichever way that goes, there'll be all kinds of excitement and opinions and, those kinds of things and stuff. And I'm sure that there's parts of the market that will respond accordingly. There's people that think if we have one outcome, the market's going to go down. And then there's people that think if we have another outcome, the market's going to go up. I will tell you, I just got a note here saying the Dow jumps more than 250 points, which, is just after it opened about 40 minutes ago. So whatever is happening must have been perceived as positive for the moment and stuff. And as long as I'm looking at my phone this much, let's do this. Let me jump into the prices because, we've got a whole list of items that we track week in, week out. And the first one I'm going to start with are the cryptos, the Bitcoin, because I have to tell you, Bitcoin has been on quite a tear. Ever since we first brought Bitcoin onto the show, I want to say it was probably back in September, Bitcoin has been on a tear. So maybe all of you are listening and then going out and buying a bunch of Bitcoin and driving the price up. I'm not going to believe that. But, hopefully you learn enough here to decide whether or not you want to have Bitcoin in your portfolio. Right now, Bitcoin is $34,538.61. It is up $2,437 today. For the week, it is up $7,172. For the month, it's up $15,379, which is 80%. And now for the year, last trailing 12 months, it's up 344%, almost 345%. And, some of that is from things that we've talked about on the show, which is there's only going to be 21 million Bitcoin ever issued. And I think there's only something like 18 and a half or so that are in circulation as we speak. And it's going to take a while for the other 2 million plus to be mined and brought into circulation and stuff. So you have a finite supply of Bitcoin. And what's happening with everything that's going on in the world, with interest rates in some countries being negative, and with the debt load that we have and other countries have, and just everything you can throw into the mix, there's a lot of wealthy people and institutions, and that's the key thing, is the institutions that have started to move their cash reserves into Bitcoin. They see that as a more viable alternative. More chance for return. Interest rates are non-existent in money markets and things like that. And if there is political unrest and some of these other things that might happen, that the Bitcoin would probably be a better place to have dollars. So, in the fall we had MicroStrategies. They started with, I think it was like 500 million that went into Bitcoin, and then Square, Jack Dorsey's company, and one of his two companies, he's the guy that also owns Twitter, but they put 50 million in Bitcoin. Mass Mutual has recently put 120 million into Bitcoin. God, what was the other one I heard the other day? I'm trying to think. There was one other one that was kind of shocking that normally is a very conservative type of institution, and they were putting a lot of money into Bitcoin and stuff. So you got this increased demand with a finite supply, and guess what happens? It's Econ 101. The price starts to get driven up. Now, does that mean there's no longer any volatility? Heavens no. I mean, I got to tell you, if you could watch Bitcoin like I do on a daily basis, it's not uncommon for there to be, 15% swings during the day. I mean, it'll plummet a couple $1,000s, and then it'll start to fight back, and then it'll go up a couple. I mean, it's a volatile vehicle. So I would never encourage anybody to jump into Bitcoin unless they were jumping in with probably dollars that if they lost, it wouldn't be the end of the world. On the other hand, what do you do when it's 34,538 and there's people out there talking that Bitcoin's going to get into six figures at some point? Do you just, sit back and let the rich get richer, or do you start to participate? And what I would encourage you to do is, start with a small amount and then dollar cost average. And I know those of you that tune into the show quite a bit, this dollar cost averaging you've heard ad nauseum. But, let's say you could afford $50 a month. There's several of these Bitcoin exchanges and wallets where you could start with as little as, heck, you could probably start with as little as, $10 or something. But, let's say $50. And then every month, when you get paid, you move another 50 in. And, over the course of a year, that's what, $600? Well, with the way it's going up, that 600 could quickly turn into, several $1,000s. And then on the other hand, if it goes down, it's not, going to be the end of the world. But, if you continue with the dollar cost averaging, it'll give you an opportunity to buy at much better prices and stuff. So that is Bitcoin. Let me see. Seems like there was another one in here. Oh, yeah. Ethereum. Ethereum has taken off lately. Ethereum right now is 1,100. Excuse me, $1,147. It's up 9% today per coin, and it has jumped quite a bit in the last 2 weeks. And so now it has, it does not have that finite number of Ethereum coins. I mean, the board of directors of Ethereum, if they decided they needed to have some more coins, out there in distribution and stuff, they could create that, from what I understand. So, but it is a very valuable crypto because of the way it works and the way they can program in automatic transactions and decisions and stuff. So you're seeing a lot of people adapt Ethereum to a coin or a program, a blockchain that can handle, complex transactions on the run, so to speak, in a matter of seconds. So that's a very exciting crypto. And there's, at this point, there's just thousands of cryptos out there. The most of the market cap is in the Bitcoin, the Ethereum, the Litecoin, the Chainlink. Let's switch to precious metals. These are going to be prices by the ounce. Gold, as of 9/17 this morning, is $1,930.10 an ounce. Silver is $27.20 an ounce. Platinum is $1,105. Palladium is $2,478 an ounce. And rhodium is $17,500. And that's per ounce. Now, the reason why you got the palladium and the rhodium and a little bit the platinum, so high is that, one, the scarcity of those metals, but two, the latter two are used a lot in catalytic converters. And, as long as there's a big demand for automobiles, I think you're going to see those metals be in a big demand for those. Base metals, copper. Now, if you watch the show week in, week out, or every other week or something like that, you know that I've been on a copper binge for some time. I think at the beginning of 2020, copper was way below $3 a pound. And by the way, the base metals, when I give you these prices, they're by the pound. But copper's up another almost a full cent right now. It's at $3.63 per pound. And nickel is up to $8.03 a pound. Aluminum is 92 cents a pound. Zinc is $1.28 a pound. Lead is 93 cents a pound. Uranium is $30.05 a pound. And then crude oil is $49.97 a barrel. So that's up a little bit. And as of 9/19 this morning, the Dow Jones Industrial Average is up 282 points at 30,673. NASDAQ is down almost 91 points. It's at 12,728. And the S&P is up 9.53 points at 3736. So that's your pricing for the day, January 6, 2021. And, I think that you're going to see some interesting things happen as we go through this year. And I have to tell you, everything I read is talking about the gold and silver and the Bitcoin and some of these are items that we've talked about being, exciting areas. I think there's a lot of people that there's two schools of thought. There's a lot of people that think the stock market is going to continue on for a lot of reasons. And then, just like a lot of things, there's the other side of the coin, so to speak, no pun intended. And, they think that the market is overpriced. It's just a matter of months, maybe weeks, until we start to see a correction. And I don't think the talking heads on TV really help us out with that, because the other day, the first day of the year, trading year, the market started down, and a lot of the folks on TV were like, I wonder if this is a start of the big one, or is this just a little blip, And I just think that they need to be more neutral as far as, just reporting the information. Because I know across the country, there's people that are influenced by what they say. And that's why I try to take a little caution in how I say things, because, I don't want somebody to ever make a decision that is wrong for them. That's why I use so many disclaimers when we're talking about cryptos or insurance or anything like that. But if you ever do need help, you are always welcome to reach out to me. First I would encourage you, if you have an advisor or an insurance agent that you work with, to go to them and, see if they can help with your questions and stuff. If they can't, you're welcome to call me at 417-755-0700, or you're always welcome to email me at tony@thegoldaffiliate.com. And, I'll get right back to you. I'm usually very, very quick in my responses, so it's not going to be, days or weeks or something like that. But I would just say that hopefully, if you've been watching the show for the last couple of years and you've taken some of the things we've shared with you and made some changes or alterations or decisions and stuff, my hunch is that you're pretty happy with the results. I was doing a meeting with a client on New Year's Eve of all things, and some time ago, this particular client had put $70,000 into gold, and initially, once it had been done, gold kind of went sideways or actually went down a little bit, and so there was some buyer's remorse, and the wife was concerned and stuff like that. And when we were talking on New Year's Eve about a couple of things, it came out that that account is now $82,000, and so he's thrilled, and she's not on his back, so to speak, looking over his shoulder and everything. But it's not always going to go up, but we think that you need to have wealth insurance, and wealth insurance would be gold and silver. And, the rule of thumb is usually 10% of your portfolio. So if you've got a $100,000 portfolio, you should probably have 10 grand in gold and silver. And, I'll give you a perfect example so that you can see that this isn't something I'm just, a pipe dream or something. Back in '08, when we had the real estate bubble and it burst, most of the stock market was down like 38-40%. And gold that year was up 5.41%. So, there's studies like, okay, so if somebody was 100% in equities, how did they turn out? And of course, they turned out with, 100,000 would have turned into 60,000. That's not the right direction to go in. And, one thing we probably should make clear is when that kind of stuff happens and you're down 40%, if you're up 40%, it's not going to bring you back to 100%. If you're from 100 to 60, and let's say the market goes up 40% the next year, that's only going to give you 24%. Now you're at 84% of your original portfolio. So you need to have, a much larger gain or bounce to get back to square one and stuff. So, but if somebody had, let's say, 90% in equities and 10% in gold, they would have just about broken even. I think it would have been, on $100,000 in '08, diversified that way, 90 in S&P and 510 in gold. They would have ended up somewhere around 98,000 or 99,000. And I've got all these studies I can send to you if you want to see them yourself and stuff. And then the people that maybe were like 80-20, 20% in gold and 80% in the S&P 500, they ended up making a profit in '08. So, we think that gold and silver provides wealth insurance. And, it's just real simple rules of thumb. I like it simple. That way I can remember it. And lo and behold, it seems to work. I know prior performance is not indicative of a future performance, but we have to go on something. And gold and silver has been around for 5,000 years, and I don't care what happens to the dollar or what happens to the fiat currencies around the world. I think you're going to see gold and silver still being something that we use as a form of money. Some people call it sound money for that reason. And if you're not familiar with the term fiat currency, that's just basically, I think it's Latin for not backed by anything. And the only reason it has value is the government tells you it has value. So, one of the articles I read, in fact, I'll get into an article here in a second, but one of the articles I read over the last week was comparing where we're at right now as an economy, as a country, as an economy, to Germany back right after the First World War and I believe it was called the Weimar power, or for some reason it had that name attached to it and stuff. And I guess when they were at this particular point as far as debt and so forth, their currency, you could take and buy an ounce of gold for a couple of them. I don't know if they were called marks back then, but whatever they were called, you could buy an ounce of gold for, a nominal amount and be happy and stuff. But what happened was, because of the debt and because of a couple of other things that are much like what we're dealing with right now, as far as, output from all our manufacturing and employment or lack thereof and stuff, within a year, hyperinflation had kicked in. And I know you're going to laugh. By the end of the year, to get an ounce of gold, it took 87 trillion of those same currencies to buy the same ounce of gold that you could a year before for, like less than 100. And don't hold me to those prices to the penny and stuff like that. I'll have to get the story and bring it in and share that with you and stuff. But let me get my glasses on here. And I want to read you one article because I just think that it's kind of an important one, if I can find it real quick here, because it's timely, and it will, in a nutshell, cover a lot of the stuff that we dance around and talk and all this kind of stuff. Anyway, this was published on January 4th, so I guess this was Monday. And the title of this is Why You Should Buy Gold and Silver in 2021. Gold and silver closed out their best years since 2010, following a year of unprecedented volatility brought on by the COVID-19 pandemic. And then there's little charts that show each metal and what they've returned in 7 or 8 different currencies over the last, it looks like, 15 years. But last year, gold was up 24.7%. And the average over those, 2005 to 20. So over the last 15 years, gold has averaged 10.8%. Silver, on the other hand, last year was up 49.3%. That ain't bad. And over those same 15 years in U.S. dollars, silver has averaged 13.3. And so as far as the article itself, it talks about the 7 reasons you should invest in gold for 2021. Gold, an asset that never goes out of fashion. In 2020, gold was one of the most sought-after asset classes due to the uncertainty in the global markets. Gold is one of the least available common metals on the earth. For the last 2 years, gold has appreciated considerably due to various reasons. However, it is yet to attain its previous peak of 2011. What are the various factors that could influence the price of gold going forward? Number 1 is the reemergence of COVID. Number 2, world economic situation. 3, the U.S. dollar value. 4, the U.S.-China reset of the world relations. 5, inflation and interest rates. 6, the printing of money. And 7, they're right now calling other factors. Gold prices will depend on the above factors in general. Although the vaccination for COVID-19 has started making its way to the markets, the emergence of the new strain of coronavirus can lead to gold moving up. In general, any pandemic will create havoc in the global economy, and in those uncertain times, gold's price will move up. Although the chance of this scenario happening in the near future is minimal, one never knows for sure. At present, economies are in a buoyant mood with the relaxation of COVID-induced lockdowns, and hence in the near term gold could be in a slow path. However, there are many other factors that work in favor of gold. U.S. dollar value plays an important role in deciding the price of gold. Due to flow of dollars to emerging markets, the dollar could weaken in the short term, which will drive the price of gold upwards. This has already started happening and could play out in the short to medium term. Dollar's weakness could help gold prices to move upwards. Even before the pandemic, U.S.-China relations were one of the reasons for gold prices to move up. However, under the new U.S. president, one can expect the tensions to be lower. Nonetheless, the relationship will not smoothen out completely. Hence, under this scenario as well, still there is a chance for gold prices to go up. Trillions of dollars are being printed by the U.S. and other countries across the world in a bid to boost their economies. This will ultimately stoke inflation. Inflation is a friend of gold and will increase its price. Under the current scenario, there is a good possibility for this, and hence gold prices could move up. Other than printing of money, general inflation will also help the price of gold to move up. Other factors such as mining of gold and gold reserves held by various central governments also play a major role in deciding the prices of gold. In the current scenario, we don't see countries selling their gold reserves. In contrast, many countries have increased their holdings. Hence, these other factors are not expected to exert a downward pressure on the price of gold. Now, next area on this article is, will silver prices go up in 2021? Silver tends to loosely track gold. Like the yellow metal, it is benefiting from investors' jangled nerves with the global economic recovery looking slow and the risk of new waves of COVID-19 outbreaks. Rock-bottom borrowing rates have also reduced the opportunity cost of holding a non-interest-bearing asset, and there's no sign of a change. Unlike the gold market, where the metal is predominantly an investment vehicle, around two-thirds of silver demand comes from physical industrial applications, such as semiconductors and solders in electronics, solar panels, water purification, batteries, and LED lighting, as well as jewelry. Rising industrial demand and continued investment interest are expected to combine with falling production from silver mining companies to support the silver 2021 forecast. Analysts at Harris Precious Metals said in a recent report, global silver mine supply is forecast to contract by 6.3% to 780.1 million ounces this year, and that's the source of that is the Silver Institute, reflecting the impact of operational shutdowns in response to the pandemic. While this is a steeper decline than in previous years, silver mine supply has been dropping since 2016 owing to falling ore grades across major silver operations and a lack of new projects. Despite silver's rally this year, producers will be hesitant to increase supply on the price alone. The majority of silver is mined as a byproduct of other metals, such as gold, which is the main source of revenue for many silver producers. Silver, like gold, typically sees stronger prices from mid-December and into the first quarter. If the trend holds, silver can continue to outperform gold. In the meantime, analysts at Australia's ANZ Bank note that silver has largely outperformed gold for the past 2 quarters, normalizing the gold-silver price ratio to 80 times. And if you remember, early in 2020, there were times where that gold-silver ratio were like, I think the peak was 121. In other words, it would have taken 121 ounces of silver to buy 1 ounce of gold. Right now, it's about 80. Investment demand has been the key driver, with ETF holdings rising to a record high of 871 million ounces this year. The retail investment was not left behind as coins and bars increased by more than 15%. These strong investments have offset weaker fabrication demand amid contracting economic activity. Mine supply contracted by 5% year to year to 795 million ounces. This has also played a role in keeping the market balance tight. The analysts commented on their projected silver prices for 2021. While investment has been the key driver this year, we expect industrial and jewelry demand to recover strongly in 2021. Electronics and solar panels will be the major source of incremental demand growth amid rebounding industrial activity. Overall, the constructive fundamentals of silver should sustain investment interest, pushing the price towards $26.50 an ounce over the next 6 to 12 months. Ole Hansen, the head of the commodity strategy at Saxo Bank, is bullish on the outlook for the silver price in 2021. Silver has always been a wily beast for investors due to its dual precious metal, industrial metal uses, and 2021 sees silver rising on both. Turbocharging the rise in the silver price in 2021, even relative to gold, is the rapidly rising demand for silver in industrial applications, especially those driving the green transformation, such as the photovoltaic cells used in solar panel production. Hansen added, in fact, a real silver supply crunch is on the cards in 2021, and it frustrates the full throttle political support of solar energy investments under the Biden presidency, the European Green Deal, and China's 2060 carbon neutral goal, among other initiatives. So there you have it. If nothing else, there may be a political reason, because of the green initiative that obviously the Biden presidency is going to endorse. And I guess there's a need for silver in the manufacturing of the solar panels. But long as it is, I think it's a very informative article, and I get that from Gold Broker. You can go to goldbroker.com. It's not giving me an author, but it was published on January 4th of 2021. I turn to Gold Broker often because they have some very, very talented people that follow both gold and silver, and some that have, half a century of experience. They've seen every possible market we can see and stuff. So anyway, with that said, let's move on to some other things I thought might be pertinent. I do not have a new coin as of yet. Today's the 6th. I think my coin of the month will come out on the 8th. So for those of you that follow my monthly coins, I'm still, let me see. December's was the Arizona. So we'll see what January has in store for us. But if you're not into this program, you might consider it. It's a very easy way to acquire some silver. And all of this silver is what they call MS70. I'll put this out here. I don't know if you can get a good glance at it, but this is an MS70 silver dollar, and it's the U.S. State Series. It's a 2020 Eagle $1 face, and it's the state of Arizona 11 out of 50. And so if silver is currently at a spot price that we talked about a moment ago, what was that, 26? Get my trusty laptop working here. Yeah, so if silver's at a silver ask of $27.26, let's look at what a silver eagle is going for. And a silver eagle is going right now through 7K Metals, which gives us dealer direct pricing for $30.63. So you can see there's a little bit of a markup due to the fact that it's 0.999 silver quality, and it's obviously in the Eagle coin format, and so there's a little bit of a premium there, but I would think that you would see both of those going up. As long as I'm into this, the gold Eagle right now, and this is both are 1 ounce coins, a gold Eagle right now is $2,008.48, and that's with the spot price of gold at $1,915.30. So there again, a little bit of a markup, but I will tell you this, when it gets back to those silver eagles, if you haven't heard me talk about the $1.2 million mistake, let me do that real quick. Back in 1986, I believe it was Reagan was in office, and they started the Eagle program in the mints, the silver eagle and the gold eagle. And if you had started back then and bought just one silver eagle a month through January 1st of 2021, you'd have about 420 of them, give or take 1, 2. but you'd have over 400 of them at this point, and you would have probably had to have spent over that number of years probably about 43, maybe $44,000, on a dollar cost averaging basis and so forth. But those coins right now, as far as a portfolio, would be worth way over 1.2 million. If anything, it's probably closer to 1.3. And I was skeptical, but I've gone to the internet and I've found the prices. And when you look at this, if you're like me and you got to have that proof, make sure you're looking at MS70 quality. That stands for Mint State, and then the 70 is the highest rating they can have. Don't be looking at, MS62 or something like that, because it won't be the same. But just FYI, that's the $1.2 million mistake, and that's why we do this show and talk about that, is we want to keep people from making that mistake. Now, I'm going to segue over to something I brought up here a show or two ago, but just because of the fact that I'm from the insurance industry and everything that's been going on, in 2020, I went to way too many funerals, and my own father's included, and a lot of good friends and friends of friends and things like that and stuff. And it's one of those things where it just dawned on me that I needed to be talking more about what they call final expense insurance. And what that normally is just enough insurance so that if you do pass away, it gives your loved ones the proceeds of the policy to take care of your, hence, final expenses. And because, an average funeral these days is not cheap. And a lot of people think, oh, well, I'll try something less expensive. I'll go to this funeral home, or I'll go to that funeral home, or, whatever the case may be. And I will tell you that, it's just across the industry. Everything has gone up quite a bit. But here is an example of a solution that I've included here lately. And this is a policy. Now, this particular one is from a company called United of Omaha Life Insurance Company. It's a Mutual of Omaha company, and the product is called the Living Purpose Whole Life Insurance. No medical exam. So right there, a lot of you are out there going, I can't get insurance. I can't pass a medical exam. Well, no medical exam. Affordable rates, simple application process. Living Promise can help you pay for final expenses and more. Turn over for details. So let me give you these details real quick, because this may or may not be something that can help you out, or someone a loved one. Whole life insurance can help ease the financial burden associated with outstanding medical bills, debt, and final expenses. And as I said before, no medical exam, affordable premium rates that never increase, benefits that go directly to the beneficiary you choose, tax-free under current federal tax law. The policy can't be canceled as long as premiums are paid and there has been no material misrepresentation. And just to give you some ballpark ideas, on a $10,000 whole life policy, and this would be for a male, non-tobacco, 55 years old, $10,000, $35.95 a month. If you were 65, it'd be $56.48 a month, and if you were 75, you'd be almost at $100 a month, $99.97 a month. So if you've got a 75-year-old male that doesn't smoke in your world, and he doesn't have any, final expense insurance or anything like that for, let's call it $100 a month, he could have a policy that would take care of that stuff. And then I've got the prices for $20,000, $30,000, and $40,000, and they go up, respectively and stuff. For women, for females, here again, non-tobacco, if you are a 60-year-old female that does not use tobacco, $10,000 would cost you $32.87 a month. That ain't bad. I mean, that's a lot less than a Starbucks a day. What do you figure? Starbucks is about $5, so Starbucks 5 times, let's call it 30, that's $150 a month. And, this is $32.87 a month. If you're 70, it's $53.24 a month. And if you're 80, it would be $98.43 a month. So that would be for the level plan non-tobacco, and both of those were for $10,000. And like I said, I've got the prices here on this flyer that are for $20,000, $30,000, and $40,000. And this flyer, by the way, is a postcard that I had Mutual of Omaha make up for me. I'm going to be sending a few of these out in the mail to different clients and people in my world that I know that are in those age ranges and stuff. But you don't have to wait until you're 50 or 60 or 55. I mean, these products are available for the younger ages, and the younger you are, the more likely you are to be more insurable and have fewer, aches and pains and, all those other things that go into health, and probably could get better rates and stuff. I did bring along a couple of other things. I think I'm going to skip that one for the moment. I did want to mention a little bit here, and I'm quickly running out of time, but Two? Okay, real quick. Let me go through these real fast. Here's a conditions chart from one of the companies I work with. And I'm just going to read the conditions, because all of these conditions I'm going to mention can be insurable, and it would be with either their easy issue, modified issue, or guaranteed issue policies. But you could currently be in a hospital or nursing home, hospice care, terminally ill, incarcerated, diagnosed with AIDS, and still get guaranteed issue. Alzheimer's disease, bedridden, blind, legally, blood disease disorder, brain disorder, cancer not treated in 2 years, cerebral palsy, chronic illness, circulation, cystic fibrosis, dementia, diabetes, heart condition, heart and lung disease, heart condition not treated, high blood pressure, home health care currently, Huntington's disease, kidney disease, liver disease, Lou Gehrig's disease, lung disease, including COPD, emphysema, mental disorder, multiple sclerosis, multiple muscular dystrophy, organ disease, case by case, oxygen currently, paralysis, seizures in the last 2 years, stroke, transplant, wheelchair-bound, any other disorder, disease, hospitalized 2 or more times in the past 3 years, hospitalized 2 or more times in the past 6 months, unexplained weight loss, used any form of tobacco, nicotine, blood pressure reading over 135 to 85, in the past 2 years had test, surgery, hospitalization, past 5 years, test, surgery, or hospitalization. All of those could have either easy issue or guaranteed issue final expense insurance. And with that, I think I'm real close to exhausting those 2 minutes. So 417-755-0700 or 833-417-4367. And thank you for tuning in this week. We're going to have some good shows coming up here in the remainder of January and February as these different things develop in our world and our economy. And be safe, wear your mask, follow the rules, and we'll see you next week. Thanks so much.